Welcome back to Everything Money. It's Seth and Paul, your two best pals. We're glad you joined us today. If you're scouring YouTube for videos on this book, The Little Book That Beats the Market, or The Little Book That Still Beats the Market by Joel Greenblatt, you've come to the right place because I just spent the last year of my life invested in this program. Paul, you gave me this book over a year and a half ago. Why did you give this book to me?
So this is a process-driven book. I read it. It's a very easy read. And I know a guy like Seth, like a lot of people out there, believe in value investing, but don't have the time to go really do the research for it.
Yes.
This is kind of a way to have your own ETF based on value, okay? He does a great job of explaining everything in this book, why he picks these two attributes, the main ones being earnings yield, which is the reverse PE.
And return on capital.
And return on assets or return on capital.
Uh-huh.
He says companies that have low earnings yield, high return on capital, tend to do well. He ranks all 3,500 companies that he looks at, 1 to 3,500. He adds their rank together, and the lowest 30, you go to his website, Magic Formula Investing, and it tells you based on whatever market cap and whether if you want 30 stocks or 50 stocks, which stocks to buy. He makes it very easy for you. Now, the reason I gave it to you was I wanted you to follow a process and not think about it. And what'd you do about 4 months into it?
Before you get there, let me show folks, I'm at magicformulainvesting.com on my screen here. Paul told me to click 500 million is our minimum market cap, and we just get stocks. You just log in with a free account, and here it is. I mean, you do get spammed a bit with some books and some marketing, but these are the accounts that I'm going to buy this coming Thursday. It's been 1 year since I bought my stocks. We'll show you which ones I bought and my return, and Paul's going to talk about sticking to a system, because if you don't have one, you're in luck. You're gonna find one in this book. So Paul, I was drawn to this system. I read the book. I started the system on July 1st last year. My son loves this book. He's read the audiobook. I think people can get through the audiobook in like 4 hours.
And your son's 11 years old.
11 years old. So.
Folks, what that means is if you don't have the time, or you say you don't have the time or the ability to understand this, an 11-year-old child literally understands the book.
Loves the book. Yeah.
He's great.
So on July 1st, I bought, Paul's got the companies behind him. Now, frankly, I hadn't heard of most of these, Paul. I have now that I've enlightened myself. But
it's funny, we'll mention a stock, you'll be like, oh, that's a stock.
Yeah, so when we do these videos, patrons say, well, these are little book stocks, these are 8-pillar stocks, and coincidentally, they tend to match up a bit, right, Paul? I mean, a lot of times the little book that beats the market stocks and the 8 pillars, they coincide, or at least they're very close. But some of these stand out, Paul. We've done videos on just Discovery, DSCA, look at AMCX, which not to be confused with AMC. And Fox A, we just did a video. And of course, you like HP. We did a video on HP last week. And if you go to the second slide, which is more of mine, the returns, Paul, have really been astronomical. I mean, only 2 have been down. This Paradiso, which is still on the list, Paul, for this coming week. I'm going to buy on July 1st of this year. And I'm not, Paradiso, I'm sorry. I'm not too pleased about this one, but it's definitely down. And look at that Herman Miller you like, right, Paul?
Yeah, I like Herman Miller.
Yeah, we've done
I don't think at $48, but I like it.
We've done videos on all.
Oh, wow, you doubled your money on Herman Miller.
Oh, look at some of these. 109. Look at the third page here, guys. Paul, look at the third page.
So is this your overall return since last year?
Now, let me be clear, folks. What we're showing on my computer as well is I put $150,000 in to this.
This does not include, FYI, it does not include dividends, does it?
I don't know. I don't
think it includes dividends.
So if you look down the side, I bought $5,000 of 30 different companies. Now, what this also doesn't include, Paul, is I had a very large holding of Msgn, which got taken away from me on a covered call. So we wrote covered calls on some of these, was maybe we should have revisited.
You should write the covered calls, but you should take the loss in the covered calls in this one and just keep rolling with it.
But regardless, I got 48%, almost 49%
You were
return.
at 60%.
I was at 60%, yeah.
So what did the Msgn? The Msgn probably had you 55%.
And Msgn fell back way down from like 80.
And Discovery too.
Yeah. So Msgn was like $80 all the way down to like
again,
30.
folks, this did not include dividends. And I'm quite sure you're going to have at least 1 or 2% in dividends here.
And again, the funny part, Paul, let me go back, is that number, Nate and I were saying 76,000, that's not correct. Look at the balance. I put 150 in. My final balance is 246 at the moment.
So that's including the Msgn thing. So you put 150 in.
That's right.
And you have 246.
That's right.
That is
1 year.
64%. I don't know what the number is.
Oh, is that? Oh, I see.
What, right? So because 100 more would have been 66%. $4,000 less, 3%.
So see, Nate, it took someone like Paul to know this. My return, I am at 59%.
No, you're at 60-some%.
And this morning we were saying less. That's incorrect. We'll have to.
So right now you're at 246 divided by 150, 64%.
Wow.
I say 64%.
You
on
did.
the nose. 64% on the nose. Now, what did the market do in that same time? So that's the important. So here's what I'm going to do. The software that I use for S&P total return. So we go to the total return and we go 1 year. And it is 60. So it's 8895 divided by 6163, 44%. You've beaten the market by 20% last year following the little book that beats the market.
Yeah.
So that's pretty impressive. Now, granted, folks, if he'd been down 20%, what would I have said?
Well, hopefully I would have not been down as much as the market, and that's the whole point, right?
Well, there's going to be years you're going to lose the market. Especially, and he even says in the book, hey, you'll have 3 or 4 years in a row where you don't beat the market. It tends to be during very euphoric times like we're in now, which is why I'm surprised you beat the market in it. I would have, if you said to me July 1st that the market would be at where it's at today, I would have said, yeah, you're not going to beat the market. Because it was euphoria that took the market higher like this.
Yeah.
So I would have still said stick to the process. It's very important to stick to the process. Seth did deviate from the process
Yes.
once on purpose, and I wanted to stab you in the face.
Yes, that's right.
A company that he originally bought turned out to have some fraud. He said, well, I have to sell it because it's fraud. I'm like, no, you stick to the process. Why? This guy, Greenblatt, has backtested this to 1988. You're telling me from 1988 until the year he finished this book that there wasn't fraud a couple of times that's 30 years of 900 stocks? Come on, of course it's happened.
This was Ebix Paul was talking about, Ebix software company.
Don't deviate from the process. Because just like a stock that could go to zero, there are other stocks that he had that doubled, right? Multiple ones that doubled. So just stick to the process. I'm very big on sticking to the process. That's why I love this book so much. It allows people with a value mindset who want to have an ETF, because everybody asks us, hey, do you have an 8-pillar ETF? You have to I have no desire to create an 8-pillar ETF. Now, would I create I have my own magic formula, by the way, that's different than this one.
Yeah.
It does, according to Greenblatt's numbers, it doesn't do as well as Greenblatt's, but a lot of people try to emulate Greenblatt's numbers. They don't quite get there. But my magic formula, my own personal one, it does 15% a year versus 6% of the stock market going back 20 plus years. So I'm very pleased with it. I just don't want you guys to use it as a way of watching every day and getting scared when things aren't working. Because value works in the long run, but in the short run, when times are euphoric and crazy, it does not work. That's why you go Google right now, you'll see tons of articles about value's dead, value doesn't work. What's it called? Spoiler alert?
Yes.
They're wrong. It absolutely does work. It just takes long periods of time. And when stocks collapse, which they will, because of overpriced markets, which we're in, value will work the best, right? And you'll probably do better in a down market than... I put my ex-girlfriend in this stock, in this portfolio.
Yeah.
And from January 1 to now, she's crushing the market. And she's always like, thank you. I'm like, listen, don't thank me. Thank me in 10 years when you've beaten the market by 4 or 5% a year. That's when you should thank me. But in the meantime, just pump the brakes. You know what I mean?
Yeah, Paul. So I had my wife in this same program as well. And obviously her account grew astronomically as well. Paul, let's pull up this year's new list, which I gave you over there. And this is going to be the stocks that I'm buying this Thursday to enter year 2 of Little Book. And Paul, do you see any bangers on there that you like? Or
well, HR Block we like. We've talked about that one. Best Buy I've been a fan of. It just still seems expensive, but Best Buy. I think I have Altria. I've looked at Dick's. HP, I think we did a video on that. MSG. I loved MSG at $20 a share, and now it's at freaking $1 billion a share. I've liked Quest Diagnostics.
Yeah, we've done that.
Oh, God, Tupperware is my Tupperware. I looked at Tupperware a year ago. It was like $1.80, and I'm like, I was too scared. Guys, I get scared too. I looked at it going, I must be missing something because how is it this cheap? And they got the $40 a share, now it's at like $26 a share. I wouldn't get into that.
Paul, why don't you pull up Tupperware on the 8-pillar app on our website, on our software, and let's take a look. Why is it on this list to justify, in some of our terms, why we might like this stock?
Okay, let's go to 8 pillars, Tupperware.
You wipe the screen too real quick.
I would love to. It's actually not even...
Look at this.
Look at this. A lot of X's, but it's at $23 a share. It was at like $1.80 literally a year ago. Revenue growth was down. I mean, that's the thing. That's the reason why I was scared. I was like, okay, is this going to continue going? And I just thought, okay, I'm not going to mess with this. That was it.
So why do you think this is a Little Book stock?
Because of this and this. High return on assets, low PE.
Look at that.
Yep, that's it.
Interesting.
That's all it is. And return on assets is just net income divided by assets, so it's pretty easy to calculate.
Yeah, so I'll do another video to follow this up, guys. If you're following along, I'm going to be investing $350,000 all at once. Kind of scary, Paul, and intimidating, wouldn't you think? I mean,
Thou shalt not be scared.
Maybe not for you, of course, but for
well, I mean,
listen,
like
me.
It's no different than buying a mutual fund. This is a process. That's all this is a process. And as long as you stick to it and you forget about it for a year, even though I know you look at it probably every day, but you forget about it and move on, you'll wake up 30, 40 years from now probably a lot wealthier.
That's our take on the little book.
Can I make another comment?
Oh, please do.
Guys, I used to have a Bloomberg terminal, and they had a pretty decent backtesting strategy. A lot of people criticize backtesting. Oh, it doesn't work? Fine. Backtesting doesn't work when you're trying to find things to do. But if you come up with a theory, it's just like science. You come up with a hypothesis, then you test the hypothesis. My hypothesis was, let me pick 2 or 3 value-oriented metrics and backtest them for 20 to 25 years. Guess how many times they did not beat the market? I probably tried 100.
Go on.
How many times did they not beat the market?
What do you think? Oh, come on.
0. The point is, now over a 20-year period, did they lose the market during the year? Of course they did. But over a 20-year period, not a single one had not beaten the market. Why is that? Value works over long periods of time. Don't get 10 value metrics. 2 or 3 solid value metrics that matter, like PE, return on assets. I tend to like free cash flow, things like that, and you will beat the market. But you got to do one thing. Take your head out of it. Don't look at it day to day. Don't make decisions based on, oh shoot, it's been 3 years in a row I haven't beaten the market. That's what happens. There could be 4 or 5 years in a row you don't beat the market. But over long periods of time, you will beat the market, and usually by a lot.
Patience.
You know, and discipline.
You talked about research, Paul, and this is totally different. But if you're a follower of our show, just stay tuned. Paul, I finally pulled up my PhD thesis. We've never done this on the show, Nate. Look at this thing. The chemistry of icosahedral boron clusters, dendritic precursors. Paul, I wrote this at one point in my life. Aspects of chemistry of the previously known intermethyl sulfonium salts have been studied. Reactions with nucleophiles. Oh, you're covering up the camera. Reactions with nucleophiles, thiamide and thiolate created methane.
155 pages?
Thioethers. Look at this crap. Isn't this crazy? I forgot I did this. This is my PhD in chemistry from Ohio State. That is wild. So anyway, folks, this book is certainly not as hard as a dendritic boron clusters, I assure you. An 11-year-old can read it and comprehend it and love it. So if you're looking to get into this, you can join our Patreon. And Paul, that beautiful software behind you is available to our patrons this very moment with a few clicks. Join the Patreon if you feel alone out there in your investing journey. Join 3,600 of our community members, like-minded.
We did pass 3,600 this weekend.
That's right. Like-minded investors who are thinking like us and this more disciplined approach to buying stocks. And I think you'll enjoy
3,600 people out of our 51,000 subscribers.
Astonishing.
Buy our software because they know how awesome it is.
It's amazing.
And I had a friend of mine once tell me software, your cancellation rate will be about 33% a month. Ours is about 2% a month.
Incredible.
And usually it's because of something where they paid in full.
Yes.
And they're like, oh, I just want to pay you in full. Like, we give a discount, they pay in full to us personally, so they cancel that.
Oh, I see. How funny.
Oh, it's incredible.
Anyway, that's the take. Join the Patreon. You can get in our community. And I love you. See you later, guys. Thanks. Appreciate it.